Welcome to Worldwide Business. I'm Kathy Ireland. For any healthy small business, there will come a time when expansion is imminent, but your available credit and finances may hold you back. Joseph Ingracia, managing member of Capstone Business Funding, joins us to discuss how his unique company takes factoring, funding, and financing to a whole new level. Welcome, Joe.
Thank you, Kathy.
Joe, when you speak with new customers, what common concerns do you hear about the financial industry and their needs specifically?
Most of the time, they complain about the length of time it takes for a decision to be made in terms of whether they be approved or not approved for funding. They come to us with opportunities that they wish to exploit, knowing that they lack the working capital to do so. We understand that if they fail to take advantage of the opportunity, there's probably not a second chance for them with that particular customer. And in today's world where everything's consolidated and there are very few customers, you do not have the luxury of turning a customer down. If you're not capitalized properly, you have to, and basically you're out of the game.
So Joe, what differentiates Capstone from other funding sources?
One of the major points of difference is that we are what's called a non-recourse factoring company, which means that we take the credit risk away from our client. So if their customer doesn't pay us, we don't go back to the client and say, you owe me X dollars, your customer didn't pay us. We rely on our credit underwriting to ensure that their customer is going to pay us. And if they don't, that's our loss, not the client. And having gone through the financial crisis, where the events that hurt the economy were all from third-party events. It wasn't a small businessman who tanked the economy.
Right.
My question to most of our clients is, why go to a bank and put all your personal assets at stake? If a customer doesn't pay you, the bank is going to come after you for your personal guarantee. In our particular case, we rely on the credit of your customer, and they're responsible to pay us back.
In this Worldwide Business Field Report, we'll take a look at how a partnership with Capstone has positively impacted their customers.
Capstone Business Funding differs from banks in that they underwrite their transactions with a focus on sales. If the client is selling their goods or services to a creditworthy account, Capstone bases their decision on the credit of the client's customer. This allows them to fund their clients and help them grow their business.
We were on a project that required us to pay our employees on a week-to-week basis. Our contract, however, was set up that we would get paid after the project was completed, which puts us between 90 to 120 days after it. So we have to look for financing, and Capstone was able to purchase our receivables and made funds available from whenever we needed it. We find that with Capstone, they're more flexible and more responsive than we would get with the traditional banks. We do also have less paperwork to work with Capstone. We found that if there are challenges on site and we need like more extra money, Capstone is always available to help us out.
Joe, could you please describe your ideal customer?
My ideal customer is someone who has expertise in their field, whose company is growing, but lacks the working capital to pursue the growth.
And why should a company consider factoring their accounts receivable?
Well, most banks and finance companies lend against a company's balance sheet, which is, as you know, their historical performance.
Right.
What we focus on is their sales. And we focus on the credit of their customers, not their credit. So as a result of that, I could grant more credit to my clients who work for large multi-billion-dollar companies than I could if I looked at their balance sheet and lent to them directly.
Which makes sense. You're visionary, you're looking forward and seeing the potential. And I understand that many industries, including construction, can often get the cold shoulder when it comes to funding. So do you factor construction companies?
Yes, we factor all subcontractors in all trades. And typically, as I mentioned in the opening remarks, they're hamstrung because of their progress billing. Most finance companies and banks want to make sure that the work has been completed or that the product's been delivered and accepted. We want the same things, but we're willing and we have systems that allow us to confirm those acceptance and delivery on a monthly basis versus a one and done, as I mentioned earlier.
Joe, please describe what you mean by working in partnership with your customers.
Kathy, I don't want to mislead anyone. We're not angel investors or equity investors, but we do customize the funding that we provide our clients based on the needs that the management team tell us during our due diligence period. So from that perspective, that would be what we mean by partnership. However, unlike a bank, which has one way of lending, we have a variety of tools that we can avail our clients to.
Let's talk about the process. How does a company get started and how long does it take?
It's a very simple process. We collect some basic due diligence items like articles of incorporation or formation if it's a limited liability company. We want the accounts receivable aging report, the accounts payable aging report, whatever contract they're working on. We want to make sure they're properly insured. A copy of the principal's driver's license or passport. We then do what's called a lien search to make sure that they haven't pledged their assets to any other institution or there are no tax liens or judgments or suits. And if all of that works out, then we're able to fund the client.
You mentioned due diligence. How much do you require, and is there a max amount that you're able to fund?
The due diligence we have is very limited, other than knowing that the assets haven't been pledged to a third party. We're mostly focused on the credit of our client's customer. So our focus is on credit, not of our customer, but of their customer. As a result of that, we can extend them credit, and the process takes anywhere from 48 hours to 5 business days.
So do you run personal credit checks, and what happens if someone has bad credit or their company has bad credit?
We're not necessarily concerned about their credit or their company's bad credit. We're more focused on their customer's credit, and our decisions are simply based on how much credit can we offer their customer and what is the size of the contract, how long will it take their customer to pay us, so we can establish the appropriate credit line so they could perform on the contract.
And Joe, what exactly can you factor in? For example, can you factor extended payment terms?
Yes. Typically, we take the accounts receivable, and our clients, by working with us, have the ability to negotiate from a position of strength. So for instance, if you are undercapitalized and you know that the payment terms are net 60, you may not bid on that particular contract. But when you bid on that contract, if you know that we're with you, you can say to that particular contract, I could take 60 days, I could take 90 days. Here's my 60-day price, here's my 90-day price. And you change the dynamic of the negotiation, and it puts you in a position of strength.
Do you finance equipment, and do you provide lines of credit?
We do not finance equipment, and we do not provide lines of credit. However, we have a Rolodex full of contacts, and we typically refer those out to other financial institutions that can help that client, and it streamlines that process as well, because we can provide background information to the other lender and say, this is the situation, they need this, can you take care of it? If the answer is no, we tell them no, we move on to the next contact. If it's yes, we put them right in touch, and hopefully a deal works out.
And do you then replace a customer's existing banking solution?
We can do both. We can either work with the bank or we can replace them. It all depends on the situation. We have had scenarios where our clients have a small line of credit that they want to keep, and what we do is we work out a legal arrangement with the bank so that we can fund beyond the line of credit, and it serves a very good purpose for the bank and the client, because we're helping the client build up his balance sheet, which means in the future, the bank can lend more to that client as they maintain the relationship.
Walsh Electric is a family-owned and operated electrical contracting business that's based in Staten Island, New York, but serves the 5 boroughs of New York City. We serve the residential, commercial, industrial, and green sector markets, both in the public and private arenas. Some examples of our clients include Bergdorf Goodman, Tiffany's, Tommy Bahama, Chanel, Christian Dior, Tom Ford, and Joe Fresh. I took over running the company in 2011, which was about 2 or 3 years after the credit crisis. So I had a huge amount of concerns on how I was going to fund a 37-year-old family business that was coming off of a few turbulent years due to a bad economy. So with some extensive research and searching the web, as well as different references throughout the industry, I came across Capstone, who ironically favors the construction business, where traditional lenders tend to shy away from construction, especially a New York City-based contractor that works as a subcontractor. This allowed us to have a credit facility that was potentially limitless which allowed us to service our A-rate clients for whatever needs they had. When we first contracted with Capstone, my expectations were that they were going to be a traditional factoring resource. However, as our relationship progressed, I've come to rely on them for bid support letters, bid review, non-legal contract review, as well as them graciously opening up their Rolodex to avail me of all of their contacts.
So, Joe, can you please tell us about your diversity program?
We have always had minority clients in our portfolio. There are numerous infrastructure projects throughout the United States that are underway, and many of them have set-asides for minority contractors. We found that many of the participation rates are below 4% because the minority contractors are unable to get the appropriate working capital to participate in those contracts. So we established a diversity program to facilitate funding and minority participation not only in government contracts, but in diversity programs with the Fortune 1000. And it's been a very significant success. We've had a lot of traction with it, and we're helping a lot of communities because these minority contractors are hiring in their local communities, and they're stimulating the microeconomy in their own communities.
Joe, you've been in the finance industry for many years. How does it make you feel to know that you're able to help these businesses continue despite the challenges and obstacles out there?
Well, it's very rewarding. I mean, we've been through a lot of the same issues that many of the clients go through. We've grown, we've had to contract, but we've got the expertise to deal businessman to businessman. I'm not a banker who's going to take an application from you and make you wait 30 days to turn you down. I don't have government guaranteed programs where it takes 6 to 9 months to get an answer and the opportunities passed you by. Very short application, a little checklist, and if everything works out, we can fund you and you know rapidly.
And what other financing tools do you offer your customers?
We offer trade finance. We do international transactions for some clients. We do what's called purchase order financing, which is a derivation of international trade where in the past we used letters of credit and other supplier credit facilities to facilitate the importation of goods to the United States. We've taken those same concepts and used them for domestic suppliers where a client's credit is insufficient for that supplier to move materials to a job or deliver goods to a third party.
So, Joe, as we come to a close, what would you say to a small business that desperately wants to take the next step, but has just been overwhelmed by what they see in the lending industry?
Don't be afraid. We've established our lending programs for companies under $20 million a year in sales, specifically those who've been disenfranchised by Dodd-Frank, which is too big to fail legislation, as it's known in the vernacular. And a 5 or 10 minute phone call with someone in my company, we'll be able to tell you what we can do for you. And if you follow our instructions, you can get funded.
Joe, there is power in partnership, and the success that Capstone and your customers have seen, it makes complete sense to me. I think your business will be a beacon of hope for so many, and I thank you for joining us today.
Thank you for having me.
Thank you. For Worldwide Business, I'm Kathy Ireland. Thank you for watching.